You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from the OptionsInsider.com, as well as, of course, on the ever-exciting, at least we hope so, Options Insider Radio Network. If we sound a little bit different, it's because I'm not coming to you from our studio in Chicago. No, I'm beaming at you from the Options Industry Conference in scenic and sometimes sunny Miami, Florida here. And we have a great slate of guests lined up for you. Hopefully you've been enjoying all the great content we've put into you from the conference all week and probably all next week too. There's a lot of stuff coming your way, listeners. So buckle up, including with our next guest, an old friend of the program. He is Gary Franklin, the Vice President of Retail Options Trading and Strategies over there at Raymond James Advisors. Gary, welcome back to the Options Insider Radio program.
Thank you, and thanks for having me.
And it's been a while, Gary. It's been a while since you and I think probably, I would say, exactly a year. Funny how that works. So catch us up. What's been going on in your neck of the woods on the options front on Raymond James since the last time we spoke?
It's been, a very busy time for us. We've, expanded in many ways. We actually have been in the process of rebranding our division. Now we're Global Wealth Solutions and trying to take a more holistic...
GWS.
That's right. We're GWS. We're worldwide now. So trying to take all the different product areas that kind of are with us or near us, bundling them together with the retirement divisions and, seeing if we can have lift even the great service that we try to always provide. We're trying to elevate that to the next level and partner to get those higher level synergies.
And so obviously you're kind of the go-to options guy over there in Raymond James Land. You're also kind of the internal options evangelist. You spread the word, you spread the gospel to the Raymond James advisors when it comes to options. So how has that been going since the last time you and I chatted? Are they more receptive to what you're talking about? Are they more interested in it? Has it made them more or less excited? What are you seeing out there?
It's funny that you bring that up. A lot of the advisors that we talk to, everybody thinks they're the one that figured out the secret sauce. And wow,
That's great. Let them think that, right? So they'll do tons of contracts. And
right. Yeah. So so I actually just came back from a presentation that I was given with around 3,000 advisors, Raymond James advisors, and the first couple of slides that I brought up were, you know what? It's great that you guys are embracing options, and it's great that you think you're unique, because you are, right? They're very unique. But the stats are showing that, particularly within our firm, we've had a great growth rate year over year for the last 5 years in a row, around 30%. But the interesting thing to me is that around 32% of our firm are active options users. And then
That's
another,
not just advisors, but firm-wide.
Firm-wide.
Wow.
32% of our advisors are actually actively using options, not exotic strategies by any means, mostly covered calls and protected puts and that kind of stuff. But then another 20% of the firm are more on like dabblers. They're more enabled, but they're not trading a lot. So that's where a lot of my strategy team helps with the educational side. All right, how can we help them? How can we teach them, to get to be more active? So that means only 44% of the firm doesn't trade options from the advisor standpoint.
That's stunning to me. I would have thought it would have been much lower, maybe like 15%, something along those lines. So,
but if you and taking it a step further, that 44% that doesn't trade options, it only represents around 23% of the firm's AUM.
So the people who have the capital are using options.
Exactly. The bigger teams, they get it. They understand that it adds value. If we're still in a low interest rate environment, if you can add 2 to 3%, and then you're bringing in 2 or 3% in your dividend income, and then you add just a simple cover call writing and add another 2 to 3% on top of that, that really adds value.
So would you say that's still the main gateway drug there, the main entry point for a lot of the advisors? Is it the covered call? Are they harvesting the old risk premium with that, or what else are they up to there?
Yeah, so I would say mostly we're seeing covered calls. The closest behind it, but it's a distant second place, would be selling puts. So if you want to acquire the stock cheaper, why not get paid? To buy it, hopefully buy a stock at a discount. We don't recommend being aggressive and selling in the money puts, but if you're selling, 5 or 10% out of the money, and you're collecting a nice premium, why not, right? If it's a stock you wanted to buy, why not get paid to wait?
Yes, I've often said that. I had a nice conversation with our guest a little while ago, Thomas Petterfee, and he was adamant against anyone selling puts. And he said, I can't do his accent justice, so I won't say it. But he wanted OCC to raise the margin on selling puts, and he didn't think it was a good strategy for a lot of retail. But I think you're right. If people have done the due diligence, if they've done the homework, if they're going to work a buy order in the stock anyway at that level, you have risk. You're in the market already, right? You're already exposed to that. You might as well get some sort of compensation for that risk, and that's what the put premium, I think, is. I think that makes
And we have a much higher level than most margin requirement. The initial requirement at Raymond James is higher, and we're not using portfolio margining or any of that kind of stuff that some of the other firms might use.
So it's harvesting risk premium in calls and puts. Then what comes in after all of the income trades?
Buying protection. And that was a big topic earlier in this week when I had the chance to speak to different advisors coming by during our booth time sessions. It's like you don't want to buy insurance when your house is burning down. You guys should be looking at it now. And I would say before we had that drawdown in December, you could put on insurance with around 30 cents on the dollar coverage for around 1.5%. Popped to at the height of it around 5.5%. It's like, all right, if you're trying to protect another 10% downside and you're paying 5.5 to do it, come on, it's too late. But now we're back below 2% again. So it's like, all right, guys, here's your chance again. You wanted to do it, you backed off, and now you should get back on that schedule of at least offering that to clients.
I've made that joke several times even here at this conference that there's a large swath of this industry that spends their days just looking to pay for puts, right? That's all they look to do, is trying to find a way to hedge for their clients and then try to find a way to pay it. So is that another, collars and things like that, are they starting to see the combo strategies? They can buy the put and then start legging into different elements to try to offset some of that premium?
Yeah, definitely. Another thing that we offer for people, with this market that's been setting new highs again, we call it a covered combo, right? So if you were interested in buying, say, Microsoft, and why not go ahead and buy 100 or 200 shares today, sell 2 calls, but then also sell 2 puts below the market, because it's been on that stock, and for example, and many others, maybe it is time for a little pullback. So might as well buy that other half of that security cheaper,
Yeah, I think that's interesting. OCC, I think, did some research on that a couple of years ago. 'Cause you're right, it makes sense, particularly if you've done the due diligence and you realize you identified the levels you don't mind acquiring the stock and you understand all that risk to the downside, then it makes a lot of sense. I think OCC, they tried to do it, and then I think it was still a little early for that. Right. And people were, whoa, what happens when it goes through the strike? That just blew their mind. And so they couldn't really get over that hump. But I think if you present it in the right way, because it certainly does make for a certain part of the audience, a certain amount of sense that that would make sense. They have this position. They might want to acquire more lower, so they'll probably be working a buy order there anyway. and they probably want to sell it on this level on the upside, so get paid to work the sell order there. So there's definitely a segment of the audience for which that makes a lot of sense. Well, it sounds like the advisors, you guys are the new savvy advisor crew at Raymond James. Who knew? Leading the charge there.
Yeah.
Such a huge penetration.
That's right.
When I would have guessed 15. Maybe if you were really knocking the cover off the ball, 20%, but a third or more. That's you're doing your work well, Gary.
Thank you, sir.
Congratulations. So, whatever the gospel you're preaching is certainly resonating out there.
All right.
With the masses. It's kind of interesting. I know you kind of just got into the conference, right now, so you haven't had a chance to really sample too much. But is there something, obviously outside from talking to me, which is, I know, a highlight of your year.
Oh, of course.
But what else brings you down to this conference? Is there anything really you're looking to glean from it, or no announcements, I'm assuming, from Raymond James this year at the event?
No, nothing really from Raymond James. But what I did hear in one of the presentations this morning, which I've been wanting to see more and more every year, it's time for this, is innovation, not only on the front end for the client experience, but bringing in fintech companies and trying to enhance the back end, the processes. I don't know if I'm not going to dare say I understand blockchain fully, but learning how to be more efficient on the back end, because that can help control costs, because everything's about controlling costs, whether it's from the client side, from the clearing side, from the market data side, for the firms that are providing the liquidity. I think if we took a step back and brought in some new blood, as far as, i.e. these fintech companies that can say, oh, wait a minute, we can do that much more efficient if we do this. So I would never try to be the smartest guy in the room, but I know how to surround myself with smart people to help me look smart.
Well, you're doing something right over there, it sounds like. You got a third of your advisors trading options over there. But you're right. It has been interesting and nice to see them kind of broadening the reach of the conference a little bit this year. We're seeing, and you mentioned the fintech kind of panel. I knew some people who were on that one, and they're just recognizing different things, entrepreneurs in the space, which is something we like to see, because there's a lot going on. I know it's an industry kind of exchange-oriented conference, but there's a lot going on, outside of that in the option space.
Right.
Some of the more interesting things, I think you're right, are happening on the smaller, more entrepreneurial type of level. So I'm glad to see that they're.
I mean, you think about like Robinhood and some of those other companies. They've got everybody's attention, because that next generation of users, the millennials, they expect a different level of experience. They expect it on their, everything pointing and clicking from their phone, and using the term clicking is probably even a dated term even now, because everything's
not many mice going out there anymore. You're right.
But knowing that we're going to have to change, even though, as you know, with the option industry, we're a very new group. And what we've done just even since like 99 to now is amazing. But to think we're probably going to have an accelerated client improved experience going forward from here that we'll be wild about.
We had a guest in here today from one of these new brokerage startups, no fee, of course, and there's not even a desktop version in the pipeline at any time. It's all mobile. It's
right.
all app based. Because that's the audience they're going after. They live on that device. They don't really play on the big desktop version. So it's kind of interesting to see some of the legacy firms that are still struggling to port it over these massive, thick install client, huge things. And then you have these new startups that are just kind of super nimble.
Right.
And they're just a little bit of an app trying to get rid of all the jargon and things in the space. You could have questions about the business model of selling it on the back end, and then kind of maybe saying, don't look behind the curtain on the front end, we're giving you a great experience. So the Robinhood certainly got in trouble for some of that. But it is interesting, nonetheless, to see what's going on that side of the space. I know last time you were in here, too, you also mentioned you kind of do, when you're not busy preaching the gospel of options, you actually do a little money management over there at Raymond James. Walk us through what kind of fund, what kind of assets do you manage over there, and how's that going?
It's going really well, and I'm over 8 years into it now. It is technically a side project, but it's a very important piece of what I do. And I've used it to meet some very interesting people, and it's amazing when you get to that side of it and see you really feel like, okay, this is creating value for them. Most of the clients that I deal with, they've already created wealth, so it's more about maintaining that wealth and growing it, right? And when a lot of people were getting out of the market, when we had the drawdown in December, a lot of the people that I worked directly with, they were bringing more money in. They understood the risk, and they're at a point where they know, okay, we usually keep 20% in cash and stay liquid. So when opportunities come, they can take advantage of it. So we for the group that I trade with, even though the market really fell drastically, we actually finished the year slightly up, which was a huge victory, and we're up back at the all-time highs again.
I was wondering about that. I was just talking to someone today about who were the people who were buying on that. We all should have been buying with both hands, right, on Christmas Eve day if we had only known. It sounds like your clients were the savvy ones who were in there buying on that dip. So I tip my hat to you, sir. Now we've been talking a lot about options here. I'm assuming you're utilizing a lot of option strategies in this fund. So what are you doing?
So this particular group is just covered calls. So we're really focusing on the long term. It's more about letting that portfolio run and just supplementing the income with calls. And now, one of the big things that I feel like separates me from some of the other managers is going to be that when the market was falling drastically, I'm not going to take action. I'm going to kind of sit back, assess this situation, and not just roll down and capture more premium. So, if you sold the 100 call and the stock falls from 95 to 85, I'm not immediately going to, buy back that higher price call and roll down to like 87.5. I'm going to sit where I am. I'm going to wait till it gets closer to expiration, and then I'm going to take action because that's the process that I have in place.
And what about to the upside? Do you roll them? Do you let the stock get called away? What is your preferred MO?
I always joke. Some people like chocolate, some like vanilla. So there's no right or wrong answer. But for my particular group, we always roll. So even now, though, because I had the discipline to not chase the premium to the downside, I'm in a much better spot, so I'm not making hard decisions. But one of the, stocks in the portfolio is Apple, and it ran to down from 230 down to 140.
It was threatening shot to 150. Yeah,
right.
We had a lot of consternation in our audience around that time because when it started threatening that 150 level, we put out some polls and talked about on our shows would you be comfortable selling, let's say, 6-month 150 puts here? And a lot of people said no. There was a lot of concern that once it broke that 150 level, something fundamental had changed at Apple, right? And it might continue hitting some lows. So usually our audience is quite bullish Apple, and that time they were not having it. I was really surprised at that. Of course, in hindsight, it seems like, obviously the sale was to sell those puts, but at the time there was a lot more hand-wringing than you might have assumed over whether Apple would recover from this latest brouhaha. Clearly the market was 210 now, something like that.
Right.
So looking pretty good now, but interesting.
And so I'm just bare, my positions are just getting, or 210 or higher, right? So luckily I didn't chase it down. There was some, I should say that recently I have been rolling up, as it's been rising, but it's more based on the discipline than the actual chasing the unknown.
And do you have a certain tenure you like? 3-month calls, 1 month, a year, is it weeklies? What's your preferred MO?
We see a lot of volume in the weeklies, but I'm more along the lines of 3 to 4 months at a time. But one of my ingredients of my secret sauce is when that option becomes the front month, I'll look to roll it. So if I've sold it for 80 or 90 cents and I can buy it back for 10 or 15 cents, that's fine because I want to go ahead and chase that fatter premium.
That's a huge win. Most people don't understand that. If you get 70 cents out of 85 cents, you should be closing that out, right? That's a winner. People who wait for that that last couple of cents to go in, or God forbid I pay commissions to close out something that's only worth a couple of cents, right? Or even if I do it for free, I still paying a couple of cents. Some people just can't get over that psychological hurdle. They won't let it go out to zero.
Exactly.
And that's when they lose all that 75 cents and then more on the upside again as it moves against them. So that sounds like it was working out pretty well for you there. So the advisors, the fund, sounds like things are going pretty well in Gary Franklin land. But let's look forward a little bit because obviously it sounds like the penetration is resonating pretty well at Raymond James. But you obviously engage with this audience on a regular basis, the advisor audience. If you had your druthers, maybe you're running the conference or you were running some outreach initiatives, what would you like to see what do you think could really take it to 50% or 60%, out there, penetration in the market? What's really the one hurdle we still have to overcome, you think, in the advisor space to really get more of these guys out there trading options for their clients?
There's several hurdles, right? The kind of two that really kind of stick with me would be, it's still a lot of heavy lifting. And heavy lifting, I mean, you've got to, put on the positions, then you have to monitor the positions, and then you've got to make decisions when you're going to take action next. So the software of building programs around it to monitor everything. When's earnings? When's the ex-dividend going to come up? If they're in the money, do I need to roll because I might get assigned early? All those things are take a lot of time. So I think that's one of the big hurdles for us and for everybody. The second thing is, with options, the premiums. If you think about it, if you say you've got a client and $1 million client, right, and they're just wanting to sell cover calls or anything like that, the premiums, the notional values, the underlying notional is huge, but the nominal premium amount that you collect is a small number. So thinking along those lines, is options an efficient use of an advisor's time? I think the answer is yes, but it's more about you've got to get to scale to justify your time's value, right, from the advisor side.
Totally, I agree with you. That seems to be one of the number one complaints we hear from advisors. I like this. This makes sense. I can add a few basis points or maybe even a few percentage points to my returns here by doing this, and yet, I have to babysit. I have to do if I have hundreds of SMAs, I have to roll them all. It's a laborious thing. So that seems to be the most frequent pushback we get, is I just don't have the time. So maybe that might be an area where we could focus. Maybe Raymond James has some interesting things up their sleeve there.
We don't want to let all of the secrets out. But we have seen a rise in the asset management division. 2 years ago, there wasn't an official on the platform offering for cover calls. Now we have two, and I think pretty soon we're going to be adding a third. So the demand is there. They came to me and they said, number one, is there a demand? I said, yes, there's definitely a demand here. And then number two, is it scalable? And I said, definitely. And 2.5 years later, they not only had the first guy, the second manager, and now they're about to add the third, and they've far exceeded the goals that they've set.
Oh, that's fantastic. That's the second probably complaint we hear from advisors is, the platforms and the tools are terrible. We just can't. They have to build it themselves because I've heard this complaint from many of them. If they said if they were their proverbial retail guy with $25,000 and they showed up at any firm, they get the sweet platform, all the bells and whistles. They show up as an advisor with maybe 200 million AUM and they want to do covered calls. They get some glorified spreadsheet on the back end to log into. It's just a different experience. It is nowhere near as robust. So I'm glad to hear that you guys are updating the platform, because time and then tools are probably the two. I've often joked if we had the wherewithal and the bandwidth here at Options Insight, I'd go make a huge suite of offering of tools for advisors that want to use options, because clearly there's a demand for that.
There's gold in there. Yes, definitely.
Yes. So I'm glad to hear you guys at Raymond James. If we can't do it, why not you guys? It makes a lot of sense. Well, Gary, I'm glad we can get you in here. Hot off the presses, hot off the flight here from Vegas and here into Miami, and now right onto the microphone. We didn't give you no rest for the wicked here, sir.
That's right. I flew all night to get here.
There we go. And we expect nothing less. It's fun to have a chance to chat here in person. But before we go, give us a little bit of a hint, a little bit of a tease. You talked about the covered call stuff. You talked about the great penetration for advisors. What else can the audience, the listeners, maybe they're Raymond James advisors, maybe they want to hire a Raymond James advisor. What can they look forward to coming from Raymond James on the options front in the coming months?
We're always looking to reinvent ourselves. I always feel like, if you feel like you're getting comfortable in whatever process you have, then you're getting left behind. So we're constantly reviewing our client approved materials. We've added videos in the last year for clients to go out to raymondjames.com and they can search for options videos, and they're quick, short, 5-minute or less animated videos. Through our partnership with the Option Industry Council. So we're trying to hit from every side and every angle, because clients understand options greater than most people think, and they're looking for ways to add value to what they have. So that's our main goal, is to constantly be thinking, how can we make their ability to trade options properly, more in a more conservative way that Raymond James has always stood for. How can we do it and with a great experience for them?
Well, it sounds like things are working out pretty well, Gary. I'm excited for you. I'm looking forward to seeing how all these initiatives unfold in the marketplace in the coming months.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.